given that US and China are entering a soft patch right now. Markets, risk assets such as equities seem ripe for profit taking. Nonetheless, we think that pullback in equities actually offer an attractive opportunity to accumulate overweights in US, China and Hong Kong on compelling valuations, Indonesia, Philippines, Thailand on resilient domestic demand, as well as Singapore on attractive dividend yield. There's no change to our view that 2013 is still a year for stocks. Over to the China front, we're actually seeing a possible policy headache for Chinese lawmakers. Reason being that on one hand, we are actually having strong credit growth, as well as property prices actually rebounding. But on the other hand, we have big GDP growth in the first quarter with China's fixed asset investment as well as industrial output performing below market's expectations. So the question is whether is there policy room effectively for the Chinese policymakers to actually cut rates and actually boost the economy without causing a further surge in property prices. So that would be a dilemma faced by the Chinese policymakers. The last point that we'd like to raise on the market outlook is that we're actually seeing incipient signs of deflationary pressures. As most of you know that commodities across the board such as gold, silver, copper and oil have actually tumbled last week. Treasuries rallied, especially the 10-year notes, while the dollar has actually remained stable. So this actually indicates emerging signs of deflationary pressures that we are keeping a close eye on, rather than a flight to safety per se. Moving on to the next slide. This is a chart of gold. Now the question at the back of most of our minds will be actually whether gold has actually bottomed. If you look at this chart here, gold has actually bounced off the 1320 support level. But we think that gold effectively has only found a temporary bottom. Nonetheless, in the short term wise, the bias is still towards the downside, and it could fall. If it breaks below 1320, the next support level will actually be around 1279. In the US, on S&P 500, notwithstanding last Friday's bounce, we're actually seeing incipient signs of a bearish head and shoulder. So this will be the head and this will be the shoulders. So effectively what we are seeing is that the S&P 500 actually flirting with the 50-day moving average support level. So over the next couple of trading sessions, if the S&P closes decisively below the 1539 support, which it has tested several times, the next major support could be around 1525. On the other hand, if it bounces up and rallies, it could face psychological resistance at the 1600 level. As we have mentioned last week, earnings are actually critical to sustain this rally, especially for the US. And IBM, the likes of IBM and such has actually performed under market expectations for earnings. For the Nikkei, it's actually gapped up today on account of the following reasons. Because over the weekend, during the G20 meeting, the leaders there expressed greater tolerance for weaker yen, and that's a positive for the USD JPY as well as the Nikkei. The USD JPY currency pair is just a whisker away from the 100 level, psychological 100 level, and in Japan we're also seeing some signs of structural micro reforms. So net is a big positive for the Nikkei, and we think that the odds of Japan entering a structural bull run is quite high at this juncture. Moving on to Greater China, for the HSCI, we see key support at the 10.5K level, and we think that it's likely to retest this level. In terms of short-term wise, it's still a downward bias. Same for the HSI, there's a bearish moving average crossover. short-term wise it's still downward bias. It needs to take out the 22.5 thousand level to actually go higher. In the STI, it has remained the most resilient across in previous weeks, right? But it remains a very tight consolidation range. It needs to, so long as it stays above key support at 3250, it's likely to challenge the 3320 resistance, followed by the 3400 psychological resistance. For the Thai index, we are seeing some signs of it turning up. MACD shows an inflection point, and price action shows that the index will actually climb above the descending slope. For Jakarta Composite Index, once again we are still seeing bearish divergence with higher highs on prices not being corroborated from a momentum point of view. In fact, momentum actually registered lower lows. So there could be a possibility of a pullback for the Jakarta Composite Index. In Malaysia, we've just crossed denomination over the weekend, where we saw a record number of candidates standing for the upcoming 13 general elections. The next key date to note will actually be 5th May, which will be polling day, and we expect some jitteriness ahead of the polling day on 5th May. In fact, the KLCI is showing some signs of consolidation, and we're currently market weight KLCI right now, but we'll overweight the incumbent Barisan Nasional. Gets a strong mandate, that is to say 2/3 of the electorate voting in favor of it. Even if, so at this juncture, market seems to have priced in a simple majority win by Barisan Nasional. Even if the BN does not gain a simple majority, we like to remind our clients and trading reps that Malaysia's strong economic fundamentals will not change overnight, notwithstanding the election results on 5th May. Moving on, I'll pass over to Derek, who will cover Quad Life.
Good morning, everyone. Thanks for joining us this morning. My name is Derek. I'll present on Quad Life Group today. We actually initiated on this company on the 8th of April, so that's close to a couple of weeks back. So now we are presenting on it to share our view and why exactly we think that it's a buy stock. So this is an overview of the things that we'll run through today. First, I'll start with the company overview, then run through the segmental overview. Finally, the financial summary and valuation of the stock. Quad Life Group is a provider of cord blood and tissue banking services. It's important to note that cord blood banking services is different from tissue banking services. Cord blood banking services refers to the storage of the blood itself from the cord, whereas tissue banking refers to the umbilical cord storage itself. The company operates primarily in Singapore and Hong Kong, but offers indirect exposure to China with a 10% stake in one of the largest cord blood banking company in China, called China Cord Blood Corp. The stock was listed in on the main board of Singapore Exchange on 29th of March 2012. That's close to a year ago. Segmental overview. South Asia is the largest revenue contributor, as you can see in the chart on the right-hand side, top right-hand side of your of the presentation slides. It contributes around 75% of the revenue, and almost all the profits actually came from Singapore, or from South Asia, which is mainly due to its operations in Singapore. Majority of the revenue of this company is actually attributed to cord blood banking, and has a very small contribution for umbilical cord tissue banking services, which was launched in Hong Kong in March 2011. So what exactly is cord blood banking? Cord blood is removed from a baby's umbilical cord at birth, and it is actually a very rich source of stem cells. I'm sure most of you will be aware that stem cells is a rich source of, can be used for various treatment of diseases, etc. So this cord blood that is removed from the baby's umbilical cord at birth is stored at a low temperature for retrieval at a later date. There are two broad kinds of cord blood banks: the public banks and the private cord blood banks. Taking Singapore's banking industry as an example, SCBB, which is Singapore's public cord blood bank, holds around close to 9,000 samples, as you can see in the top right-hand side of this presentation slides, and which actually constitutes around 0.23% of the residential population, or 0.17% of the total population in Singapore. As you can see, the ethnic diversity of these samples closely matches that of the residential population in Singapore. So the basic difference is that if it's a public bank, you will have to hope that there will be a sample that match your baby's cord blood, your baby's stem cells. Whereas if it's a private bank, it's obviously 100% match for the individual who stores the cord blood, and it's actually a very close match for the family members as well. Some demographic trends in Singapore. I'm sure most of you will be aware that Singapore is struggling with very low birth rates over the past few years. So the government actually set a target, an explicit target, to move the total fertility rate in Singapore to 1.4 to 1.5 times, as compared to the 1.28 to 1.30 times in 2012. If you compare historically, the run rate of the live births in Singapore is probably around 39,000 a year. Last year was, of course, the Dragon Year phenomena led to quite a strong growth. There was 43,000 live births in Singapore in 2012. So part of the package, part of the initiatives to actually raise this fertility rate, the government actually introduced a $2 billion marriage and parenthood package that was announced in the budget recently. In Singapore, there are two private players, Cord Life and StemCord. Based on the numbers from the company's prospectus in 2010, Cord Life actually has a 62% market share as compared to the 38% of this next competitor. For Hong Kong, similar to Singapore, they are having total fertility rate that is below the replacement rate, and which is 1.25 in 2012. And if you look at the trends of what happened over the past, say, a decade or so, the live birth in Hong Kong is actually driven by the mainland women that actually delivered in Hong Kong. So that actually put quite a bit of a strain on the resources of the hospitals in Hong Kong. So consequently, the government actually came out with a policy to restrict mainland women from giving birth in Hong Kong. So that's an impact on Cord Life's business in Hong Kong, which we will tell you in a while. We actually expect contraction there. There are 5 private players there. Cord Life is ranked second. Health Baby, which is a company based in Taiwan, actually holds a commanding 45% market share. So let's look at some comparables. The top right-hand corner, these are all the markets that are relevant to Cord Life. In terms of fertility rate, Singapore and Hong Kong rank at the bottom of the chart there. But in terms of healthcare expenditure and GDP per capita, Hong Kong and Singapore ranks much higher there. We think that the healthcare expenditure and the GDP per capita is a much more important gauge as compared to the fertility rates, as ultimately cord blood banking is a discretionary form of spending. So the amount of disposable income of the citizens of the population is in the country is more important. And we think that conceptually, cord blood banking is similar to life insurance. So if you look at the historical trend of insurance penetration in Singapore, in 2012, there were 4.9 million lives insured as compared to the 5.3 million population. So close to more than 90% of the population are actually insured. So if let's say cord blood banking's current market penetration of around 24 to 25% follow the same path, we would see quite a bit of an upside for this industry over the next few years. Financial summary, we expect deeper penetration in Singapore to drive revenue growth, which we expect to increase at a compounded annual growth rate of 13% over the next 3 years. The stronger revenue growth in Singapore is expected to offset the weaker market in Hong Kong, so which we actually expect a contraction there. But we think that it's not as important to Cord Life, as Singapore has always been the core profit contributor. Furthermore, Cord Life actually locked in their long-term fixed costs after moving into the new facility in Yishun. And with that, we think that the companies will benefit from economies of scale and will likely see margin expansion over the next few years. So consequently, we actually expect free cash flow to sustain at more than $8 million a year after FY15. So quite a bit of an upside from there. So let's just run through some of our key assumptions in our valuation modeling. We actually expect stagnant penetration from calendar year 15 onwards at 38% for Singapore market and Hong Kong of 21%. So we think these assumptions are fairly conservative, as we see long-term positive for this industry. Furthermore, we have yet to actually build in umbilical cord tissue banking services into the Singapore modeling, which could provide upside for our valuation of the stock. The next area, there is actually the Cord Life actually has a right of first refusal to purchase acquisitions of some fast-growing emerging assets from the Cord Life unit that is listed in Australia, that Cord Life actually demerged from. So any acquisition at a fair price would be another potential upside to our forecast and valuation of the stock. So how much is this stock worth? We believe that the best way to value this company's core business is through the discounted cash flow model, because of the stability of its business operations in Singapore and the highly cash-generating nature of its business. So our DCF models actually values the stock's core business at 145 million, and we use the market price of China Cord Blood Corp. That is around $287 US dollars per share. This is a listed company in US. That is another $26 million. And if we add in all the investments, cash, and less of all the debt on the company's balance sheet, that works out to 84 cents per share, still presenting quite a bit of upside on this stock. We initiated on the company at 64.5 cents. It trended higher over the past 2 weeks. Now it's probably trading at close to 69 cents. Still quite a bit of upside to go. On a forward PE basis, at 64.5 cents, it's 15 times PE, undemanding for such a defensive stock with strong balance sheet holding and very good earnings visibility for the next few years. So if we look at the adjusted free cash flow yield, that's more than 7% over FY14 and FY15. So if we take a bullish view and expect the market penetration to increase in Singapore and Hong Kong to 60% and 40% respectively, that is beyond FY15. And if we use the consensus target price for CCBC, which is around 550 USD per share, our target price on a bullish view would actually be more than $1.10, presenting even more upside. But if we look at the downside, modeling in unchanged market penetration from calendar year 2010 of around 24% in Singapore and 11.5% in Hong Kong. And if you use 1 year low of CCBC's market price to value the stake, that works out to be a target price of around 64 cents. So on that basis, we think that the risk-reward trade-off is fairly attractive, presenting quite a bit of an upside on this stock. All right, that's all that I have for you today. We can move on to question and answer. Thank you. Okay, we have a question on Life's business model. Do they get a one-off payment or an annual subscription? That's a good question. The company has various payment plans, some of which you can pay off one shot. So for example, in Singapore, if you want to pay off one shot, it will be $6,200. But if you choose to take annual payment plan, they have a lower upfront cash outlay, but the clients will need to pay around $250 a year for this recurring payment. The business model is fairly defensive. Ultimately, it's just like a storage business. So I would like to say that it's not comparable to other healthcare stocks in Singapore. A lot of them are like, hospital operations, which requires quite a bit of a cash outlay for the capital expenditure of this hospital. And say biosensors, for example, which is highly dependent on the technology for its death eluting stance. But for Life, it's really it's a storage business. We have another question that is, could you elaborate a bit more on Life being a defensive company? As I mentioned earlier, Life actually locks in its customers for a contractual period, which is 21 years in Singapore and 18 years in Hong Kong. So effectively, you sign on this contract, which could allow recurring annual payment to the company through its annual payment plan. Just as a gauge, right? In the last quarter, the company actually announced that there are 25,000 customers that are on the annual payment plan. That will lead to a recurring annual cash flow of around $6.25 million. So that is probably quite a number that is locked in for a long term. And in the long run, if let's say the company, the individual grows up and decides to keep his cord blood at Life beyond its contractual period, that could provide upside for the stock as well. The next question is, how long can these stem cells be in storage? I think this question is a little bit technical, but theoretically it can be for a very long time. I don't have the exact number of how long, but so far this stem cells, Singapore Life's started operation in early 2000, and well, some of the samples have been used before. How long, I can't comment on that, but it has been quite a lot of them are still in storage. I'll hand over to Wei-Wen.
Yeah, hi. So I refer to Chong Wei's question of whether how deep we expect the correction in S&P 500 to be. Now, as we mentioned earlier, the S&P 500 is showing some possible signs of a bearish head and shoulder. So effectively, for those who are familiar with technicals, we might want to look for a lower right shoulder. So if it goes up and it comes down, and if it breaks below 1539, the next key support would actually be 1525. So you're actually looking at 14 points correction, right? But if that head and shoulder pattern does not materialize, and if it bounces up again, then you might face psychological resistance at 1,600. So all that would actually depend on earnings, which more of which will actually be released over the next few days. The second part of the question is whether we advise customers to sell now if they're in a profit. Now, I guess we could actually reduce some of your position, right? Take some profit, and leave some to run, depending on whether the technical pattern materialize and depending whether earnings actually outperform, US earnings actually outperform market's expectation.
Alright, Derek here again. We have more questions on Cod Life. Let me just run through them one at a time. I have a question. What, in your opinion, is the most challenging issues facing Cod Life in the near term? Okay, I think the most challenge, there are two key issues that are on my mind now. The first one is I expect them to buy over these emerging assets from the Australia entity, CBB, which was part of, which Cod Life Group was part of prior to the demerger. So I think the key challenge is to really bargain when they acquire all these operating assets to get a good price for them, because ultimately in every acquisition is really a discussion process and agreement on how much to pay for these assets. So if the company overpay for this, I think that it would be a negative. But if you look at the market price for CBB, the entity that is listed in Australia, I would think that the company, the market valuation is around close to 9-10 million Aussie dollars. So could be covered by slightly over a year of free cash flow from the Cod Life Group. The next key issue that I think could be a challenge would be the contraction in the market in Hong Kong, because there are some restrictions on the mainland women giving birth in Hong Kong, which was a key driver of the birth rates in the country. So that would be one area to watch as well. But recently we checked the pricing in Hong Kong, and I realized that there was a little bit of a upwards revision as compared to the numbers from a year ago. So that could be some mitigating factor as well. The next question on Cod Life is, what is the business risk for Cod Life? If stem cells are faulty due to technical problem, is Cod Life liable to compensate? Yes, actually, to mitigate this risk, they actually purchase insurance to cover these risks from, say, faulty stem cells, etc. Yep, they have insurance coverage for this area. Please keep the questions coming. I'll hand over to Wei Wen for now. Next question.
Okay, with regards to the question on our view on the US debt ceiling and whether it will affect the market. So a couple of background information first. So the US needs to raise its debt ceiling by May 19. So at this juncture, the progress is rather slow in terms of negotiations wise. But instead, we have the sequestration in effect right now. So with this lack of progress, there's a good chance that we might see once again political gridlock between the Republicans and Democrats with regard to the US debt ceiling. So come closer to May 19, there could be some jitteriness in the markets, right? And that effectively, could lend support to the thesis of sell in May, that kind of thing. So so there's something to look out for US debt ceiling come May 19. But at this juncture, we do not have a view of firm progress going on the US Congress front on this front. If there are no more questions, we will actually end the presentation now. Okay, wait.
Hi. Before we end, we would like to bring you to a reminder that tomorrow we will be having platform to host a presentation. So the key executive management of the company will be on the webinar to answer your question and update you on the company development. So please register this webinar, and for tomorrow the time will be 11 a.m. to 12 p.m. and I will keep this slide shown for a while. Thank you very much, and we will hope to see you next week. Thank you.